Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the one, the only, and your boy Lanny, the Dividend Diplomats, guys. And we are back here with another video talking about two dividend REITs to potentially buy right now.
Before we talk about these high yielding REITs that are going to juice up your dividend income, smash that subscribe button. Give this video a nice thumbs up. Everybody, we did it. We hit 14,000 subscribers. Now, Lanny, we're on to 15,000 subscribers. So let's go. And maybe, guys, let's push ourselves, push the community. Should we try and get there by the end of July, Lanny?
Oh, man, I would love that, guys. Definitely, spread the news, spread the love. Let's keep pushing to financial freedom because that's the main goal right here, right now.
And Lanny, before we jump into these two REITs, this was an interesting week in the stock market. S&P 500 finished up for the week, closing just a hair below 3,900. And another big piece that's going to impact the REIT market, Lanny, what happened with interest rates this week that's been different than the last month or so?
Well, interest rates are a little bit, interesting. Obviously, some borrowing rates have come down almost as if it's been priced in, kind of like what I was saying, I think a bunch of videos ago. The Fed did increase rates 75 basis points last month. There's like a 97+% chance they're going to raise it another 75 basis points this month. So the Fed funds rate will be between 2.25 to 2.50%. And what that usually means, obviously they're trying to fight inflation, but we're talking about real estate investment trust or REITs. And typically these are higher levered, businesses, and typically that should bring down real estate valuations and raise their borrowing costs, which should typically send REIT stock prices down.
That's right. So as you keep your eye on REITs, you have to keep your eyes on the interest rates and what is going on in there, because that has a major impact on the financial statement for these REITs and their ability to grow their earnings. And you know what that translates to: growing that dividend, baby.
It's all about growing the dividend, guys. So we're here to talk about two very popular REITs. We wanted to take a fresh look at them. One actually, the second one that we'll get into actually has had a better track performance, specifically over the last month versus, what you typically have seen. There were some pretty good potential buying opportunities, maybe about a month or two ago. But is there still value? We're going to dive in. We're going to look at the dividend stock metrics. Instead of the price to earnings ratio, we're going to look at the adjusted funds from operations ratio, or AFFO, which is the highly popular metric when looking at REITs. We'll still look at the dividend payout ratio, obviously using that against the AFFO. And then we'll look at dividend growth as well as the dividend yield.
That's right, Lanny. So we're going to jump into here. We're going to run the companies through our stock screener that's modified for REITs. And that's what it's going to be all about. These are two companies. Lanny, you own both of these REITs too. So that's what's going to be exciting as we're talking through these videos. You own two, I own one of them. You are going to be pumped up once we talk about those REITs. You want to kick it off, Lanny? You want to talk about that first big one today?
Guys, let's get into it. The first one, obviously Warren Buffett still owns this company, and we are talking about the single tenant operating real estate, aka STORE, Store Capital, ticker symbol STOR. The big REIT obviously trading at on a downward swing, down about 25% in the last year, or over 22% year to date. This REIT definitely has not performed well this year. Warren Buffett slimmed down his position. And, obviously, I think there's a combination of that plus rising rates has sent the stock price dropping.
That's right. But it's still a great company overall. Buffett still holds, to your point, some holding in there. And you know what? It's a great REIT, and that's why you have to evaluate it. You are gobbling it up too, just like Mr. Buffett in the past, Lanny. You have a pretty hefty position in Store Capital. It's not small. I can't remember the exact number of shares, but it's not a small amount.
No, it's not a small amount. I own over 200 shares of Store Capital. So let's just say I've invested probably over $6,000, and it's probably worth just under that amount as well. I'm definitely down in my position because I was buying in the think lower $30 range. Obviously, I was grabbing some shares in the 20s, but I was really buying a lot of shares, I think in between $30 and $34 per share.
But we're going to get into the screener here now and see, is it time for Lanny to maybe add to his position? Or we'll see what it looks like, because maybe that could be a great result of this video. That first metric, that price to AFFO ratio, they closed as of July 8th. Friday is going to be, their price was $26.86. AFFO is $2.28. That's a price to AFFO ratio of 11.78.
Yep. And the reason or the way that we got the AFFO for the year is we literally took the first quarter AFFO and then just annualized that out. So that's where we're at right now. So 11.78, obviously that is lower than the S&P 500, which is 20 times on a price to earnings ratio standpoint. Well, the reason why I also brought in a second one is to see how they compared to the, we'll call it the king of REITs, as we'll get into.
Yeah, don't give too much, Lanny. Don't give too much. We'll come back to the comparison after the fact once number 2 is revealed. The annual dividend for Store Capital is $1.54. That gives you a payout ratio of 67.54% based on AFFO.
Which, that is very low, community. Again, you typically should see a higher dividend payout ratio for REITs. They're required to pay out up to 90% of their earnings back out to the shareholders. So there's plenty of room to go here. And let's dive into that dividend growth rate.
Yep.
That third metric, they've been growing their dividend for over 6+ years. Obviously, they haven't been public for that long. So they have been growing their dividend consistently, consecutively. Average dividend growth rate is just about 6%. And the reason why that's nice is because you'll go ahead and dive into the next metric, Bert, that dividend yield.
Their yield is solid. In fact, it's fantastic. Their dividend yield is 5.73%. So when you take a high yielding stock at 5.73%, you couple it with a 6% dividend growth rate. That's a huge dividend growth factor that helps you earn a lot today, but also see it growing at a very large clip too. That's great for a nearly 6% yielding stock.
Yeah. So guys, in summary on Store Capital, you have a below 12 AFFO ratio, below 70% on the payout ratio, above average dividend growth rate for the REIT, right here at about 6% with a high yield at 5.73%. So if you don't own real estate physically, but you want to, this is a great stock to keep in your portfolio here.
Yeah, so dividend stock number 2 is just laughing there on the sideline. They're like, Store Capital, it's great you've increased your dividend for 6 years, but I am a freaking dividend aristocrat. I am the GOAT of the REIT dividend investing community. I am known as the monthly dividend paying REIT, the monthly dividend company. Everybody loves this company. Number 2, everybody, Realty Income, ticker symbol O.
The O, it's the O, guys. Everybody knows about Realty Income. If you really want a monthly cash flow from a stock to own, Realty Income is usually the GOAT in everybody's portfolios that provides you, typically like you are a landlord. You are literally getting a monthly rent check coming your way from Realty Income.
And that's why it'll be fun to compare Store Capital to Realty Income, one of the best in the sector, because it'll help us really see how they are valued compared to the best in their industry. Should we jump right into the metrics here for Realty Income, Lanny?
Let's jump in. Obviously, first out the gate, though, Realty Income, is down only 3%, which compares pretty favorably, against, Store Capital down 22%. So when you think of Realty Income, they've actually held up well as the stock market has gone south. So keep that in mind, that when you're investing, when you're building up that dividend portfolio, it's always nice to have different industries if you're buying individual stocks, because Some stocks may do well during certain time periods. So here, this real estate entity is doing very well despite what's going on in the macro economy.
Excellent point. So let's look at that first metric. Their price $68.98, AFFO $3.92, price to AFFO 17.60.
Yeah, so Bert, I mean, obviously right out the gate here with that first metric, what is Realty's AFFO compared to Store?
Stores is 11.78. As a reminder, Realty income 17.6, so it's much higher.
Much higher. Still some good value there. We'll get into this next metric, the dividend payout ratio. Being an aristocrat, they've had to increase that dividend each year for 25 plus years. And that is exactly, what they've been doing, but their payout ratio still says, hey, you got room to go. So the payout ratio is only 75.77%. So Bert, a little bit of wiggle room still on Realty income.
Yeah, and their 5-year dividend growth rate. That's the funniest thing about Realty income. They increase their dividend quarterly. Not every increase is large. It's often fractions of a fraction of a penny. But the 5-year DGR is 3.34%. And as you said, they're a dividend aristocrat. They earned that title a couple of years ago. They've increased that dividend for 26 consecutive years.
Yeah, so lower dividend growth rate right now. I know they just announced a small one, but I didn't even get to really a chance to even see or even place into the portfolio until just recently this month. But they increased it again last month in June. Bert, did you know that?
Yeah, I just forget it because it's always like a fraction, like 0.0005 of a penny on their monthly increase. It's not much, but it's something.
Right. The dividend yield right now on Realty income is 4.31%. So much lower than the 5.73%. So, literally 1.42% higher for Store capital.
So to summarize, Realty income, price to AFFO 17.6, payout ratio 75.77%, 5-year dividend growth rate 3.34%, years increasing 26 plus. They're an aristocrat. Yield 4.31%. And we don't need to go through and re-review Store. We've talked about the comparison between the two, but we're going to put the chart up there. I guess, Laney, do you have any final take when you're comparing Store capital against Realty income based on the results of our stock screener?
Realty income, is definitely much more steady, definitely much more highly looked at within the investing community. You don't own a REIT, but you own individual stocks. Always, I think, the best place to start, just because you get that monthly cash flow / passive income from the REIT. And again, it's less volatile, at least in my eyes, than Store capital. Store capital, though, again, is a nice, I think a nice business. Obviously they've seen better times versus this year, but hey, we'll see what the dividend increase looks like for Store capital. But, if you're a new or a beginner investor looking for a real estate exposure, Realty income is usually a safe bet.
Yeah, and I think the less volatility plays out when you compare the performance year to date for the two companies during this turbulent market year. Store's down 22%, Realty income's only down 3%. So that's kind of the benefit of owning one of the best in class in your sector, especially when times get tough.
Yeah, I agree. Now, Bert, are you buying any of these two stocks right now?
No, but I'd be honest with you, I don't own Store capital, but it's interesting seeing there. So I mean, I think it might be a good play for me if I want to dip back into the REIT. If I'm a sector, I don't think it's a bad one right now. There's definitely value there, and luckily there's a lower payout ratio. That 67% payout ratio is kind of what's tipping it for me to get Store on my watch list, because it's plenty of room. The dividends got plenty of room to keep growing and safe, especially if earnings keep dropping a little bit.
Yeah, I agree. Because I own so much of Store, definitely I'm going to keep it on the watch list. If it gets back into the 25, I'll probably be, all in, obviously, buying more Store. But there you have it, guys. What are you guys doing knowing the REITs? I know REITs are heavily talked about. I know in the Twitter community. Obviously, we've seen the comments as well on the channel. Are you buying REITs right now? Are you holding off during the rising interest rate environment? Where else are you investing your dollars, creating that passive income, trying to get to financial freedom? Let us know, please.
If you haven't already, subscribe to the channel. Give this video a thumbs up. Everybody, let's get to 15K before the end of July. Help us out, spread the word of dividend investing and financial freedom.
Help me help you. Help me help you. Guys, that was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.